Hello, this is Malcolm McCallum with Federal Register Reviews again. Today we're going to go over, just to begin, the Federal Register is an official daily publication of the United States federal government. It is where the federal agencies and president formally publish rules, proposed rules, notices, presidential documents, and executive orders and proclamations. If you'd like to know more about what the Federal Register is, I have a video on that explaining its purpose and how it ended up coming to be. Bottom line is if you want to know what's going on in the government, you read the Federal Register. Today I'll introduce a new notice that was published on June 29th, 2026. The notice's name is Change in Bank Control Acquisitions of Shares of a Bank or Bank Holding Company. It's Federal Register document 91 FR 39100-39101. I want to hear your feedback, thoughts, questions, and viewpoints on this document, so please leave a comment below. You can also subscribe to this channel by, at the end of the video, there's a thumbnail on the screen you can click and you can subscribe to it. Also, you can push the like button if you like this material. This is one thing to know is that this is I'll wait for that. Okay, so I am Malcolm McCallum. I hold a PhD in environmental sciences and have for over 30 years. I have over 30 years experience teaching in higher education. As an environmental scientist, my role is to research, educate, and inform about how the world of humans and the world of nature interact. And this notice is one of those things that interact with both. The umbrella of this is called the socio-ecological world. The overarching purpose of this field of environmental science is to protect everyday people and the natural world from the rich and powerful. So I believe that by just explaining what news items appear in the Federal Register, I'll be informing everyday people what the government is really doing if they're working for you or someone else. Remember to hit the like button and subscribe so you will always be in the loop with what they want hidden by distraction campaigns on TV and radio. So, today we're going to go over a notice from the Federal Reserve Board of Governors of the Federal Reserve System. The author signatory is Michelle Taylor Fennell, the Associate Secretary of the Board. This is a Federal Register note. This is on the Federal Register notice page. Comments must be received not later than July 14th, 2026. So you have a little under a week to comment to this if you'd like. Comments are accepted by email. You can send those to comments at atl.frb.org. If you are not clear what I just read to you, you can actually look up this Federal Reserve notice on the Federal Register by just doing a browser search for the name of the notice, the date, and Federal Register, and you'll get right to it. There's no phone number. You can only submit comments via email. For a brief summary of what this is about, this Federal Reserve notice announces two pending Change in Bank Control Act applications. The first involves members of the Shaw Family Control Group seeking to acquire additional voting shares of Lafayette Banking Company and thereby indirectly acquire voting shares in Lafayette State Bank, both of Mayo, Florida. The second involves a 2024 voting agreement by BankGuam Holding Company of Joaquin P. LG Cook as manager. The numerous parties to that voting agreement seeking to acquire additional voting shares in BankGuam Holding Company and thereby indirectly acquire voting shares in Bank of Guam, both of Hagatna, I don't know how to pronounce it, it's Hagatna in Guam. A related portion allows Haig Tri, I don't know who the person, I can't pronounce the name, There's a couple of people. They'll retain some custodian and retain voting rights in the organization. The notice is a public comment and transparency step in the Federal Reserve review process. It is not an approval, denial, merger order, or substantial change in banking regulation at this time. But depending on the comments they receive, the feedback that is noted, and the decisions that are made, it could. How this changes previous policy? Well, the notice doesn't change previous policy currently. This doesn't actually change policy at the moment. Okay, the practical change is narrower. The Federal Reserve has publicly acknowledged that particular persons or groups have applied to acquire or retain control-related voting interests in specific bank holding companies. If the Federal Reserve does not object after review and submission of comments, the applicants may move forward with the described control changes, subject to applicable conditions. This is a governance and ownership notice, not a bank merger in the usual sense. There's no indication in the notice that Lafayette State Bank or Bank of Guam would merge into another bank or that bank operations would change immediately. So why do they have this notice? Well, the statutory rationale for the change in the bank control is the change in the Bank Control Act. The Federal Reserve states that applicants have applied under the Act and Regulation Y to acquire shares of the bank and bank holding company, and that interested persons may comment on the standards in the Act via the per the Federal Register. The Federal Reserve Interagency Form explains the rationale more generally. Information submitted in the change in control notice enables federal banking agencies to evaluate and decide each proposed change in the control under the statutory standards. Failure to provide requested information can result in disapproval or finding that the notice is incomplete. The notice itself does not give a business rationale for why the listed parties seek additional shares or retention of shares. The legal grounded explanation is procedural. The board must review proposed changes in control to evaluate ownership, financial condition, management, competitive effects, safety and soundness, and the relative statutory concerns before allowing control of a bank or a bank holding company to change. Political viewpoints on this. So I didn't find any public statements by members of Congress, Florida officials, Guam officials, or local officials specifically addressing this exact June 29th, 2026 notice. That's really not unusual for change in bank control notices, which are often technical and institution specific. The political context comes from a broader debate over community banks, bank mergers, regulatory burden, public accountability, and consumer protection. But at the end of the day, it is legislature's role to serve for oversight over these kinds of matters, and the fact that none of them have said anything about it should be kind of telling to you as a everyday person who voted for them. Legislature has incumbent upon them oversight over the executive branch in the balance of powers. So there are some political notes that are relevant. The Bank of Guam portion of the notice lists Lords A. Leon Guerrero of Hagatna, I'm not sure how to pronounce it, as a current party co-trustee in the BankGuam voting agreement. Independent public biographies identify Lord Liu as the current governor of Guam and as the former chairwoman, chief executive officer, and president of the Bank of Guam and BankGuam Holding Company. I did not find a public statement from the governor on this specific notice, But the reality is that one could argue there is a clear questionable conflict here between being a political figure and the owner of the bank as it's going through this process. Republican banking policy leaders generally emphasize streamlining review, reducing compliance burdens, strengthening community banks, and improving access to capital. Representative Andy Barr framed a 2025 hearing as an effort to improve transparency and efficiency in bank merger review and promote a more competitive and accessible banking landscape. Chairman French Hill and Representative Barr later described community banks as central to Main Street, small businesses, farmers, and families, and called for a regulatory framework that encourages growth. Applied to this notice, a Republican-leaning view would likely support efficient Federal Reserve review so locally rooted family and shareholder groups can maintain community bank continuity without excessive delay or cost. Democratic banking policy Democratic banking policy leaders often emphasize scrutiny of ownership, consolidation, predatory lending risk, access to credit, and consumer community impacts. Representative Maxine Waters criticized faster bank mergers as potentially wiping out community banks and credit unions and leaving a few mega banks to serve constituents. Senators Elizabeth Warren and Chris Van Hollen argued in another bank acquisition context that regulators must protect safety and soundness and fair access to financial services. Applied to this notice, Democratic-leaning view would likely ask whether the proposed control groups preserve responsible local banking, avoid conflicts of interest, protect depositors and borrowers, and sustain fair access to credit. Certainly, the fact that the very governor of Guam is also the owner of the bank, is a majority owner in the bank, clearly would be a question for this group, for the Democrats. Community banks have a distinctive local information advantages. The St. Louis Federal Reserve summarizes that community banks are well positioned to lend to small businesses because they understand local economic conditions and business opportunities, and because they show higher ratios of small business loans and microloans to assets than larger banks. And in fact, small business tends to push the economy more than big mega companies such as mega banks. One deals more with competition between banks and and businesses. The other, in the case of mega corporations, they tend to operate entirely on trying to be efficient because there is no real competition at their level. Kansas City Federal Reserve research similarly emphasizes that community banks continue to matter in the U.S. economy, especially where local small business and agricultural lending needs persist. This supports a Republican community bank argument that well-managed local ownership can preserve credit channels important to rural areas, farms, small businesses, and households. Regulatory burden is also a serious issue for smaller institutions. A 2025 CSBS working paper found statistically higher compliance cost burdens for the smallest community banks and recommended proportional regulation. So this supports the argument that federal review should be rigorous, but not be burdensome. That it be so burdensome that it accelerates consolidation or discourages local ownership. The FDIC working paper by Avery and Samalik found that relationship between consolidation and small business lending is complex and local market dependent. It also states that the more independent social issue is whether community banks provide services that would otherwise be lost during consolidation. This supports the Democratic concern that control and consolidation decisions can affect local access to credit and should not be treated as merely private transactions. Federal Reserve research on bank failures found that recent bank failures led to lower income and compensation growth, higher poverty rates, lower employment, and that the structure of the bank resolution affects local economic outcomes. This supports the case for serious review of bank ownership and governance because local bank weaknesses can affect local communities, not just shareholders. The evidence also tempers both positions, the Republicans and the Democrat views. It weakens any claim that all review is needless red tape because bank control affects safety, soundness, lending, and local economies. It also weakens any claim that ownership change is inherently harmful because local family or voting agreement control can preserve continuity in community banks and may be preferable to sale to larger, less locally embedded institutions. So this relates to how does this relate to the big picture of the socio-ecological system in which we reside? The social system, our businesses, our homes and economy, versus the natural world. Well, this notice is not directly relevant to the natural world. It concerns bank ownership. However, it is still relevant to the socio-ecological system because banks are part of the social and financial infrastructure that determines how communities use land, recover from disasters, finance farms and small businesses, build housing, fund water and energy infrastructure, and respond to ecological and economic shocks. The two affected institutions sit in socio-ecologically distinct places. Rural North Florida and Guam. In rural Florida, community bank credit can affect agriculture, small business formation, land ownership, housing, and local resilience, the ability of the local area to deal with economic and environmental problems. In Guam, bank control and credit availability are tied to an island economy facing typhoons, military-related development, housing pressure, health and public sector needs, and climate-related coastal vulnerabilities. In socio-ecological terms, the notice affects the financial governance layer of the system. It does not directly change water quality, forests, agriculture, or climate exposure. Instead, it affects who controls local financial institutions that may finance actions across all of those domains. So from the impact on the different cohorts of this system, the federal governance, there's a moderate procedural impact. The Federal Reserve is publicly reviewing control-related ownership changes under the Change in the Bank Control Act and Regulation Y. Local financial stability is potentially positive if reviews. It's potentially positive if the review preserves stable, competent, locally accountable ownership. It should be a positive effect. But it could also be negative if control concentration creates governance, conflict, and succession risks. From a community banking perspective, this could be a potentially positive action if the transactions preserve local bank continuity rather than encouraging sale or consolidation. Community banks can be important lenders to small firms and rural borrowers. From a small business and farm perspective, the impacts are rather indirect, but they are still very important. Bank control can influence lending appetite, relationship lending, agricultural credit, and local commercial development. Households and consumers will have indirect impacts from this policy should it come through. Control changes can affect bank strategy, fees, branch service, mortgage availability, and local access to financial services. There is also a public transparency issue that will be positively influenced should this be carried out. The notice, by just doing this notice, the notice creates a public record and comment opportunity before the Federal Reserve acts, which could be valuable in decision making. From an equity and fair access perspective, the outcomes are uncertain. The key question is whether ownership and governance continue to support fair lending, CRA performance, and service to underserved communities. From a land use and development perspective, there are indirect impacts from this action. Local banks finance farms, housing, commercial property, and infrastructure, so ownership strategy can shape local development patterns, which does directly impact the natural world. Climate and disaster resilience have indirect impacts as well. The banks can finance recovery, mitigation, and adaptation after storms, floods, crop losses, and other shocks. This is especially relevant for an island or rural communities where these are very important sectors of concern. From a socio-ecological resilience, a big picture resilience, in other words, in the big picture, are things in general going to be able to handle this change? Well, there are mixed impacts here. Locally rooted banks can increase resilience through relationship lending and community knowledge, as we've said before. Weak oversight or overly concentrated control, however, can reduce resilience through poor governance and uneven credit allocation. The bottom line is that this is a small technical Federal Reserve notice, but it matters because control of community banks affects local credit allocation. The notice does not change banking policy, but it gives the public a chance to comment before control-related ownership changes proceed. This is your opportunity to make comments and make sure that things you might know or care about are considered in the process of evaluating whether or not to go through with this action. From a socio-ecological perspective, the key point is that local financial institutions are part of the hidden infrastructure that shapes agriculture, housing, small business, disaster recovery, land development, and community resilience. And so if those things are not closely monitored and considered and protected in the process of what is being requested here, then it could be a bad day. That'll be it for today. Have a nice day.